In a world where finance freedom is the greatest goal, where every dollar invested can change the course of one's life, there exists a realm of infinite opportunity and boundless potential, and that's where I come in. Welcome back, investors, to another amazing episode. Today, we're going to be diving into the exciting world of dividends and exploring the top dividend ETFs that can give you the boost you need to achieve financial freedom. Let's start by understanding dividend exchange-traded funds, or ETFs. They are investment vehicles that provide a diversified portfolio of dividend-yielding stocks. For investors aiming at passive income, knowledge of the workings and benefits of such funds is essential. Let's delve deeper into the intricacies of dividend ETFs. Dividend ETFs are mutual funds that track an index of dividend-paying stocks or companies with a history of regular dividends. They typically hold a basket of dividend stocks across various sectors, giving investors the advantage of having multiple streams of income. Now, how do dividend ETFs generate income? It's quite simple if you understand the ropes. The dividend paid by the underlying stock in the fund of these sectors are what generate revenue for investors. Distributions to investors are done periodically, often quarterly, from these companies' shares in the ETF. In the investing world, dividends can be compared to perpetual gifts that keep on giving. They are a portion of profits given to shareholders and can be a dependable source of income over time. One way many people choose to invest in companies that offer dividends is through exchange-traded funds, ETFs, as they are commonly known. I will share with you 6 high-dividend ETFs that will get you on the path to making amazing passive income. Let's dive into our list, starting with the 6th, the Invesco S&P 500 High Dividend Low Volatility ETF with ticker symbol SPHD. This guy right here is a great deal. It holds a portfolio of the 50 most yielding, lowest volatility securities tracked by the S&P 500 Low Volatility High Dividend Index. It is currently paying a dividend of 4.53% and has an average annual return of 3.9%, making it a solid performer that mainly focuses on sectors such as utilities, consumer staples, real estate, healthcare, and materials. While its dividends may not gain ground quickly, they are dependable and can provide a stable income source over time. Number 5, Wisdom Tree U.S. High Dividend Fund, also known as its ticker symbol DHS. This ETF seeks to provide broad exposure to the value category of large cap stocks. It's a great choice for those who believe that markets are efficient, given that it has a dividend yield of 4.33% and an average annual return rate of 3.96%. And do not underestimate this one, because it goes beyond what you think such investment has to give. DHS is amazing. It includes over 388 stocks in its portfolio, with most of them being American firms that operate globally. If you're interested in this kind of thing, then this might be your cup of tea. While some of these stocks may have poor stock price performance over recent years, many have shown consistent increases in dividend, resulting in dependable income streams for investors. With an average annual dividend growth rate pegged at 7.34%, the fund could generate substantial returns over time. Before we proceed further to our next top dividend ETFs, please take a moment and hit the like button, and don't forget to drop a comment about your thoughts about these ETFs that we've encountered so far. Getting value from this episode? You are welcome to subscribe to our channel for more prudent content on investing and wealth creation. Now let's dive right back into our list of the highest rated dividend ETFs as we explore more passive income opportunities. The next on our list is the iShares U.S. Consumer Staples ETFs, identified as IYK. It focuses on corporations that are involved in selling simple products like food products, drinks, household utilities, and drugs. It has a dividend of 2.69% and an average annual return of 7.45%, making it one of the better performers in a sector that typically fares well even through economic slumps. Investing in ETFs such as iShares U.S. Consumer Staples ETFs offers some benefits. For example, it provides diversification whereby you don't have to put all your eggs in one basket. In addition, they provide liquidity and transparency, as well as being cost efficient, therefore attracted to both beginner and experienced investors. Well, let's move to number 3 on our list, Invesco KBW Regional Banking ETF with ticker symbol KBW. This one is different from other banking sector ETFs that focus on big banks. It is intended for regional banks and smaller firms rather than large financial institutions. The Invesco KBW Regional Banking ETF has done well despite apprehensions in the financial industry, with the dividend yielding standing at 3.21% and yearly average return being 2.06%. Hence, it can be a powerful income generating tool for investors because its dividend growth rate is 10.34%. Now, some of you might be asking, why focus on regional banks instead of JP Morgan or Bank of America? Well, such banks are typically more agile and less exposed to global market risks, like those characterizing the Eurozone crisis. Hence, they provide stability and a chance for growth, which investors may be interested in. Moving on to the second highest ranked ETF on our list, S&P Regional Banking ETF with the ticker symbol KRE, which aims at giving investors exposure to the regional banks portion of the S&P Total Market Index. It is an ETF that invests in a diversified portfolio of securities to provide investment results that replicate as closely as possible, before expenses, the performance of the Bank of New York Mellon Regional Bank Index. It is important to note that KRE offers a way for people to have revenue generated by subsectorial investments in regional banks, unlike traditional finance sector investments. With its net asset value standing at $49.27 and dividend yield at 3.26%, this ETF has exhibited fortitude despite a year-to-date daily total return of negative 5.93%. This ETF has been around for more than 10 years and directly lets investors benefit from what is happening in U.S. equity markets relative to their positions on regional banks. Several industry giants have endorsed this ETF, such as Bill Gross, who still sees gains in banking stocks even though there are recent challenges associated with this sector. A valuable addition to portfolios of investors seeking to expand their risk and return perspectives in the regional banking sector may be KRE, offering a balance between these two elements within the specific market segment. Now, the moment you've all been waiting for, let's shine the spotlight on the highest ranked ETF on our list. First Trust Financial's Alpha Dex Fund with ticker symbol FXO. This ETF was established on 8th of May 2007 and is sponsored by First Trust Advisors with the focus on the financial sector, having approximately 97.4% of its portfolio allocation towards the sector. To select and weigh stocks within the financial space, the First Trust Financial's Alpha Dex Fund applies an Alpha Dex strategy aiming to outperform traditional market cap weighted indexes. This ETF presents investors with an array of diversified investments across various types of financial companies that may yield higher returns given their unique method of stock picking. For investors to evaluate if the fund is right, they should consider its dividend yield and past performance. The First Trust Financial's Alpha Dex Fund has a strategic focus on the financial sector and has demonstrated competitive returns over time, making it an opportunity for investors who want exposure to this particular sector of the market. This ETF provides a chance for investors looking for some kind of profit in the financial markets to participate in such growth while receiving regular dividend income, as it's currently yielding 2.9% with a CAGR of about 7.35%. FXO has shown that it is well-paced to exploit opportunities found within the financial industry due to its excellent performance and concentration on specific sectors. And since you've made it this far, I'm going to give you a bonus ETF, and that is Invesco High Yield Equity Dividend Achievers ETF with the ticker symbol PEY. This ETF holds the 50 U.S. dividend stocks that have the highest yields and a record of increasing their dividends. This gives investors access to companies with an impressive track record of consistently raising dividends. PEY changes its composition 4 times per year and pays out cash monthly. This type of structure ensures that investors receive regular income from their investments. The majority of its underlying assets are value stocks, which represent around 3/4 of the total weighings, while core equities make up the rest. It spans across various market capitalizations, thereby enabling it to provide sector diversity. The company mainly has utilities representing about 25%, while financial services have a weighing of approximately 20%. According to Morningstar, PEY has had upside capture as well as downside capture ratios, indicating of limited volatility in the last 3 years, irrespective of fluctuations within a given day or longer period lasting for weeks or even months. The Invesco High Yield Equity Dividend Achievers ETF has a dividend rate of 4.95%, and its average annual return over the past 10 years is an impressive 10.15%, thus creating a very attractive option for investors who desire to receive regular income from ETFs that have given them solid total returns. This fund offers income generation in addition to long-term growth potential. Hence, it is an excellent supplement to a diversified investment portfolio. And I do want to mention that investing in dividend ETFs necessitates a careful assessment of your financial goals, risk tolerance, as well as the period you want to invest. There exists an ETF suitable for your needs, whether you are looking for stable income, long-term growth, or both. Thank you for being a part of this amazing episode. And remember, if you find this valuable information, make sure that you like this video and subscribe to our channel so that you will be able to get a more in-depth analysis of investments and strategies. And keep an eye out for our next episode as we continue guiding you through areas that will lead you to achievements in life, financially speaking. Meanwhile, keep investing happily.